Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. I'm Giles McMullen, talking to Bill Rook from Redmayne Bentley for the first session of the new year. Bill, Happy New Year to you. How's it been going?
Happy New Year to you, Giles. Well, the rally over the Christmas period has been stupendous. It depends how you capture it, really. I mean, we looked at a lot of company called warrants, which offer a lot of gearing on the underlying. So if the underlying start moving up quite strongly, we get sort of 10, maybe 12 times, maybe at some points 2 times gearing of what's going on. So very, very exciting. If you're in the right product, of course.
And of course, you've been trading oil, and more of that later. But I know you've done well on the oil contract.
Yeah.
Let's turn to first the FTSE 250, which had. An appalling 2008, really.
Yeah, it was down. I like it about 39% off, wasn't it? I mean, that's sort of my reckoning with it.
Something like that, yes.
Yeah, the FTSE was down 31%. This is underperformed by another 8%, so around 39% off. What's actually going on at the moment, though, is interesting because it's gone from a negative position where that vertical line comes in mid-September, late September, where we would have sold, and you would have actually made 20% hedges sold from there. And it's now turned black, which suggests that it's now moving to a neutral. It hasn't gone into green yet, so into neutral now. So out of the puts and into a neutral stroke, waiting for a positive signal to come along. Now this is being supported by the other short-term trending indicators I've got on board here. So the inverse Fisher is now supporting that, waiting for a bit more from Q. The bottom figure is a sort of red, yellow, green traffic light system. The moving averages have gone neutral now, so we're waiting poised for movement higher. And historically, the 250 has always done better the first part of the January calendar than the 100. So I'm hoping that's going to live true, Giles, there. So we're looking for a bit of upside here. What I've done here is also looked at November, where there's about a 68.35 level. That's sort of where that sort of halo is in there. So we need we need to break through that. And I think we're looking towards an 8,000, 7.5, 8,000 level, which is sort of around the corner. By the way, I forecast last month that we're going to get to 4,600 on the 100, and I wanted it before Christmas. And it's done that this morning, I suppose. It hit the 4,600 and bounced off it. So the FTSE's done what it should have done, 4,600. It's hitting a bit of resistance there. And this one here, I think, will go towards the 7.5 to 8 level.
Okay, well, so that would be a good bounce if you were trading that on the upside. Let's move to the S&P 500, which is the next chart that you've prepared for us. S&P. Now, this is indicative of. For me, this is indicative of the VIX coming off. VIX is coming off, which is very, very exciting. VIX cooling off means to say the markets are less fearful, and more people are not put positions out in the market, anticipating the market's going to go lower, and volatility dropping off, of course, meaning to say the stability for markets coming through, and this is what we're seeing now. It's testing a key level of 92. It's risen 20% since the 20th of November. Which is a nice move already. Where is it going to go from here? Well, short term, we have the number of shares above the 50% now, above the 50-day moving average is travelling quite strongly, which suggests that there is something warming up here. What we're also not seeing is volume. Volume is very light. And what I'm seeing from the IFT EOD is that advanced decline. This is measurement of we're slightly overbought short term. Slightly overbought short term. That's that's the fourth window down from the top. So this is lime green. This is suggesting to me that we're slightly overbought short term. Might be cooling off, consolidating within a band between say 100. And say, well, on the low side, I suppose we could say 85, 90. So cooling off and before it starts gathering steam again if it wants to go higher. So, but again, the new high-low ratio from the top is still pretty bad, so suggesting there's plenty further capacity upside. Capacity upside is good. VIX is coming off, which is good.
volume levels which are low, which is not so good, overbought short term. That's what it is in a nutshell.
Okay, and you mentioned there that volume is low. Is that just because it's Christmas and New Year, or is it historically low compared to previous periods of this similar time?
It's actually, we look at the simplified VFI at the bottom there, the trend of volume. It is cooling off a bit there, and it's a combination of both, Giles.
Okay.
I would think.
All right.
Yeah, combination of both. We need to see that travel further forward, and if it's seasonally it is low, and we need to see further volume to support this market going higher, I think.
Okay, now let's turn to a market that has been, well, it's been quite a roller coaster ride, certainly throughout 2008. If you look at the crude oil price, you know, it went from sort of the 70, 80, 90 up to 150,
right.
then back down to 35 or thereabouts. It's trading at around about
20% we made on that. Yeah,
absolutely. And it's trading around about 46 today. That's light crude. What are we looking at here? Which contract is this? And
this is WTI.
Right, that's a WTI.
And it's nearly 46. Well, it's been up 20% before in September, when it went from about 78 to 90 odd. And it's are we very excited? Well, it's still red. What I've done here is I've got a 5 and 20-day moving average pasted here. So while the fill is red, it's still in bearish mode. You can see up before July, from February on to July, it was green. This is where the 5 and 20 was crossed. And this is positive, and a big 20-25% if you traded that well in that period. And then on the downside, you made a very good turn. Now, what are we looking at now? Well, it's reached a very, very oversold situation on last Monday, and it had made about 30% had you traded the Loyal contract, which is a leveraged contract based upon this underlying. So this would actually magnify your gains. If you're not in there yet, I think it's very speculative at the moment, and we might see a trading range of between 35 and 50. This has still got further upside to go, I think. The long-term indicators above, you can see they're suggesting that still the downtrend is still in place. So there's capacity for upside, I think, to about 50, where we peaked in mid-late November. So it will range between 50 and then possibly coming back a bit, maybe to the 35. But it's sort of trend is on the downside with capacity for upside.
Bill, thank you very much for that. Thank you for those choices. Good to talk to you after the break, and I'm very glad to hear that you've had a lucrative Christmas on the market.
Well, it's been a good trading period because of the underlying the markets have been oversold. I think oversold, or some people would suggest it's probably come back to a reasonable price, but others perceive it's oversold, and the indicators suggest there's bounce, and when there's bounce, we trade it.
Now, I know you're not about predicting year-end levels. You just look at what the market's doing and trade it. But I'm going to ask you anyway. A year from now, at the end of 2009, where will we be?
Which market?
FTSE 100.
The FTSE. I would think, let's say 5.5.
Okay, and presumably in between there, there'll be a lot of movement.
I would think so. Yeah, I'm not reasonably bullish because of what's happened before, and I think we've got the prospect of a big recovery plan coming in. I think deflation will evaporate, and I think we'll see an inflationary cycle coming through, and I think equities will kick in at some point during the year, and depending on how soon recovery is perceived to be kicking in. I think we're in for about a year, definitely.
Bill, always good to talk to you. Thank you very much for your thoughts today, and we'll chat again next week.
Thanks, Josh.
Chart of the Week with Redmayne Bentley.